All right. Good morning, everybody. Do the thing again. Looks like China's getting a little stimulus. I would proceed with caution. This isn't the first time they've thrown some stimulus at it. It's just the biggest stimulus package that they've thrown at it so far. We still don't know the ramifications, and most of the names that we would see in that space are seriously beaten down. So even if this is good stimulus that sticks, there's going to be a lot of froth and work to get it back up into some decent levels. And you don't have to chase it. I'm pretty sure it's going to come back and let you into it. JD, PDD, Baidu, Baba, XPEV, Neo, all of those. Green on the screen, watch the news throughout the day. Tensions in the Middle East getting pretty rowdy, and we've seen some of the impact of that yesterday on the markets. If it gets worse, that's one unknown that can shift markets really fast, and you won't see it coming, right? It's not on the docket. It's not one of those known unknowns that we can expect on the day-to-day. We got a lot of Fed speakers still. They're all just singing from the hymn book, reiterating the same things that Powell already said. No real surprise there, but they're all getting their 2 cents in. We're going to get Bowman at 9. We've got some the Bank of Canada this afternoon. It's a bit late in the day for that, but there it is. And we do have some auctions. So busy day again. And the spot gamma index is above +2, which implies that if we break out, the breakout doesn't stick and we come back in the zone again. Now, that doesn't mean that we can't break out and run up or down because of news, right? That just says that unless we get some news that moves this market, gamma structure says we're going to hold the line and that breakouts will fail. Check that number every day in the spot gamma founders note that I share. Looking at 77,000 this morning on the overnight volume. That's pretty decent. See a little bit of the sell-off that I was talking about. Just it didn't take much news to knock us to the downside. We had an inside day breakout, wasn't able to keep it. Right now we're running reciprocation on VWAP. So what we had on the top side, we got to the bottom side. We're now back to VWAP again. The top of our Globex session is also the high of the London session. The Asian session high was this peak here. And then, of course, the Asian low down here. So just trying to tie in those time zones with the market. That'll make that level a level to watch. 57.87. That's pretty close to the 57.92 cog line. And then this high, a lot closer to that cog line, but also closer to the roundy, 5,800. $58.11 is the cog wall. Volatility trigger below 57.27. We would need an inside day breakout. Then we would need to get below the lower ADR to even get there and challenge the 3-week moving average and the 10-day moving average. Speaking of that average daily range, we were a lot closer. Obviously, we gave some of that back in the drop. So now we're basically flat, no edge one way or the other. When we were closer to the upper edge, then the bias would have been, if we're this close, we'll probably go up and hit it. But now we would have to get a Globex breakout to get to that level. And my focus at this point is, can we even get through the halfback from that news that happened? So we did that. Now we've got to get through the VWAP and then get back up to where the news started to make sure that this isn't some sort of liquidity gap close play. Because the threat right now is that we run back up to where this drop started and we close that gap and then we continue the drop. That is the concern at the moment. We have a wider range than yesterday on the central pivot. That implies that if we attempt to break out, the breakout fails. Just keep in mind that these channels don't make price do anything. It won't make us hold the range. And if it was a very skinny or a very narrow channel, it wouldn't make us break out. It's just giving us an indication that if we break out, could it grow legs and really expand? Or is it more likely in a breakout that that breakout fails and we come back in the zone? The wider the channel, the more likely it is that the breakout fails. So we have spot gamma that says breakouts should fail today. And we have the central pivot that says breakouts should fail today. You can also tie into that, what kind of day is today? Sideways day, range day, trend day. Now, we don't know yet. We don't have enough information yet. But one of the characteristics that we use to define what kind of day today is, out of the 6 types of days that we could get, every one of the descriptions starts with, what was the IB? What was the initial balance? Was it very narrow or very wide? And that is one of the key pieces later in the day to define what our expectations are: range, sideways, or trend. And I know I get it. A lot of you don't see the difference between sideways and range, but there is a difference. The channel being higher than the previous day's channel is considered bullish, and price opening above the pivot point is considered bullish. But you see how far that got us. It is interesting to note that on the breakout, if you measure how far the breakout was above yesterday's high. So we measure all of yesterday from the highest point to the lowest point. We got into the liquidity zone, and then we got to the edge of the measurement. That's as far as we would expect it to go if we were looking for a reversal point. It would have been spot on perfect to see it turn at 11. But even getting to the 1, 2, 3 and then turning is pretty awesome, right? Because it's what we do all the time when we measure breakouts. Liquidity, and then if we can get through the 1, 2, 3, 6, then we expect opposite candle color there. And if we can get through that, then we go to first target 1, first target 2. Price just doing what it's supposed to. So you see the volume profile for this week, building structure right at the previous D. Remember, this may look like a B, but it's not. It's 2 different Ds. So this is a D. And then separately, this is also a D. And the profile is in the lower D. But we're building out structure here. We're adding to this. If I was to put it on a higher time frame, say when we go to the 10-day, 30-minute, it's likely that structure and this shallow area is going to be the main focus. So 57.60 or maybe a nice round number, 57.50. It's a critical level to hold. Otherwise, air pocket down to 57, and then things get wild, and we're talking about 55. So a 200-point drop, or 55.50. It's a 150-point drop. Yeah, that tickles. So here's the same profile in a different time. 10-day, 30-minute. 5,700 that we were talking about. If we break to the downside below 57.50, then 5,700 is our last refuge. If it doesn't stop there, then 55.50 or even 5,500 is in play. Air pocket a risk. We don't have a new VPOC from yesterday. We crossed through that zone multiple times last night, so nothing there. The two profiles, TPO in blue and volume profile in green, they both line up. Really have nothing here. No surprise, no insight to this. We're still 3% above the 10-week, and we're slightly on the decline. It's okay. There's nothing wrong with this. It's exactly where we would want to be in a bullish market. Sitting better than 2.5% above the 10-week, maintaining that structure. It's just a very good, bullish, positive bias. We're not overextended. We haven't run too far too fast. It doesn't owe us any sort of pullback or mean reversion. Looking at the 10-day, we're more than 1% above that. So we're in the sweet spot. Anything below 1.5 and above, say, 0.5, it's a good place to be. We're not overbought. We're not overextended. We're just in a good bullish posture. It is worth considering unfinished business and liquidity. So this is the 19th. It's Thursday. There's an old phrase in the market that the body is the trade and the wicks are stops that triggered. It's just a nice little phrase, right? Kind of give you an idea. But it's also a good representation of unfinished business and where there is liquidity. So the last time we got up into that 5,800, we were rejected, but I'd say anything above 57.80 or even 57.85, we're getting into that zone of rejection. Now, we don't know if they're done yet, right? If there's more liquidity up here that we've still got to work through, or if we're done. And the current candle isn't closed yet. So there is that. We've been working on it. We got into this area yesterday. We were rejected. We got into it again earlier this morning, and we were rejected. But we're running back up into it again. I know there's this concept that the more times you test a support or a resistance level, the more valid it is, the more structure it has. I disagree. In one form, yes, because you'll build up a lot of volume, then you'll have a volume structure and you can apply something like a volume profile. So there is that concept on one side of the fence. But on the other side of the fence is liquidity. And if we're running into a bunch of sellers here, and it's only a set number of sellers, just put a number on it and say 10,000 sellers. Every time we get into that level, we take some of those sellers out. 1,500 here, 700 there, 1,300 there. We just keep hitting it and just keep taking more and more and more of that liquidity until there's nothing left. And or the sellers decide, why am I selling it at 58 when I could sell it at 58.10, and they just move up where they're selling it? Then will go through that zone. So right now it's a fight to see who's going to give up first. Are we going to absorb all of that liquidity and continue our aggression and continue moving higher? Or will the market back away from that zone, as we've seen it do before when it gets into resistance that it can't get through? A lot of times it'll get into a zone and fight it, and then it'll jump that zone in the overnight hours, so to speak, when nobody's looking. It's the kind of the phrase that'll jump the fence in the middle of the night when no one's looking. So we want to continue to watch this zone and look for signals that this is failing, that we're not able to get through it like yesterday. It does seem to be that Thursday's close is the line in the sand, and we can see the other side that they're down here also with that liquidity, because we can play these wicks and this concept from both sides. Every time we get below 57.60 or even into that 57.50, they've been willing to stand up and come in and provide liquidity at that level. When or if they stop doing that and we make another move to the downside, then we could really retest Thursday's open way down here. 56.92 cog line. So if these buyers continue to step up, and you can see they're stepping up sooner each time, the low on those wicks are higher lows. If we were using OCR analysis, then since FOMC, we've continued to get higher lows every day. We haven't necessarily been getting higher highs, because on Friday we dropped down and set that lower high. But so far, Monday and Tuesday, higher highs again. We just have this Thursday bar, and that Thursday bar is in control. That's the boss. That half back breaks, we're definitely going to retest this 56.92. So China given a lot of push. We'll see how much that sticks before it starts to fade. Uranium, precious metals, emerging markets again, which is China, energy. We've got multiple forms of energy, XLE, XOP, gold miners fits in with the precious metals that we've seen up here. Building materials. Mag 7 is working in the right direction. It's just not up enough. So Baba, big jump up. We can see it after it finally got out of that range that it's been working in. If 80, then 100 is a phrase, but we got into like 91 before and we failed. We got into 90 again. Now we're getting that breakout. If the move continues, we're at 94, call it 95 now, could make it to 100. That'll put us right into this zone here. It's kind of the same shape, just a narrower version of what we had here, right? There is a phrase, the wider the base, the higher in space. I don't know if you guys have heard that. It's a swing trading concept. The idea that, you know, if we do build this basing structure after a market gets beat down and is holding the zone or whatever, that the wider the base, the longer it goes sideways, the higher in space. take a look at something like PayPal for an example, which it only took a year and a half, but it's finally going, right? I was only a year early. So we got Baba, Baidu, all those China group, right? And they are beat down. I mean, they don't look any better than solar names and pot stocks at this point. So, don't chase these things. If you've got, a good intraday entry that you want to go in and day trade that and turn it into something that lasts as a swing, and you've got good structure in your trade, then why not, right? That's trading 101. But don't get FOMO and go running in there thinking that you can just buy some calls. Calls are going to be elevated. VIX is going to be up in those. The prices are going to be crazy expensive. And they're not liquid products to begin with. So, you're going to get ripped on the bid and the ask, wide strikes. Give it a little time. It's very likely going to pull back anyways, even if this is going to be what we've all been waiting for, right? And that the next 12 to 18 months is going to be China slowly coming back out of the pits. Great. It's 12 to 18 months. You got plenty of time. So just breathe. Some nice moves in uranium for sure. And it's not just this one name, but it's this space, right? The uranium space has been lit like half the month or more, but we're right up into the year-to-date anchored VWAP. And that's a dangerous spot. So we want to see how it manages this level. Now, we've got examples where it cut through it and just kept right on going, right? Like right here. So it's not a ceiling or, there's nothing that says it has to stop there. But look how overextended it was to begin with just to get there. And you got to kind of have the expectation that it's going to pull back a little bit. If we add something like the 111 to it, this says we can overshoot that, get into 29, maybe even 29 and a quarter, and then get rejected. Well, that makes sense because we've seen some back here where we overshot it and then came back in on the other side. Crude continues to get lit, which makes sense with all the shenanigans going on over in the Middle East right now. Just remember, there's a set of energy rules that are in place when you go to play energy. And events like this are always a sell, not a buy, because they're short-term spikes and then it just gets washed again. I use SMH for a proxy on all semis, but of course it'd be better if you go to each semiconductor on its own. AMD, NVIDIA, ARM, Qualcomm, Intel, you just MU, go through the list, right? But just looking at one name, kind of lumping it as a sector name, SMH. Semis are up this morning. If we were to get a bullish breakout rally day, we would need semis, right? You need the Mag 7 and you need semiconductors. Without those, then there's really not much of a breakout to talk about. The thing is, if that's all we need is the Mag 7 and or semiconductors, then it can come at any time. We're up a little bit now, sure, but we're still stuck inside of that really big bar here from the 19th. That's that Thursday after FOMC. We got to get out of this bar. So sure, we're doing good, right? We're holding above the half, but we've got to get out of this zone. And just like we were talking about earlier with liquidity, we don't know if there's any sellers left up here, but we have to assume that there are. And that drive to the upside got this gap closed from back here. But some analysts will argue that we didn't close above that level and that we don't know if all the unfinished business is done yet. Well, I mean, you can see the Abercrombie and Fitch chart was like Nvidia plus Bitcoin combined, and it just ran, right? It outpaced both of those put together. So sure, I don't see why that company couldn't also do that. But the thing about IPOs is that they spend a lot of money trying to figure out how to entice people to buy into it. So, if you think about an ad on television trying to sell you a car or bubblegum, that's generic content that has a mediocre targeting mechanics. When it comes to an IPO, they do a real good job of making it sound like they just reinvented the wheel or created something as awesome as fire itself. So careful with IPOs, especially with the hype. You can run a search on, say, whatever AI you want and see some of the biggest IPO misses when it comes to price, both good and bad. Like Facebook, for an example, they really didn't know how to price Facebook when it first came out because they really didn't have anything to compare it to. Beyond Meat is another example that comes to mind. So just be careful. As with all my experience with psychology, which I have a master's now, and I'm not done with my education, but master's in psychology, and I know what they do with advertising. Psychology is a big part of it. An IPO is the cream of the crop when it comes to isolated and specific manipulation to get you to do something. Silver in that precious metal space, 2850 still our line in the sand, but if we can get above that, then we're looking at getting back into that 2950 space and perhaps a breakout. Gold miners, silver. Bitcoin's a little soft this morning. There was some news with BlackRock and their BIT. It's one of their ETFs for Bitcoin. It got options approval. That's going to change things a little bit. In the Spot Gamma's report this morning, they talked about Tesla. BIT. I thought it was BITO. Thank you. But I didn't want to say for sure because if it wasn't BITO, then it was BIT whatever, right? Whatever the other name is. I thought it was BITO. That's going to be cool, right? Having another one with option structure behind it. But Tesla was in the Spot Gamma founders note, and they put some dates in there worth keeping an eye on too. I think they were some for October. And I don't think that we've got the final word on the government shutdown yet either. So there's that still looming. Google took a pretty good beat down yesterday after it got into this liquidity zone. That 166 held pretty solid. $160 is the pullback structure. It could form like a Busby. So willing to keep my eye on this one, see if we find some support around that 160 level. If 160 breaks, then we're looking at 155. What would be nice if we get a little bit of a bounce on that 160. Get it to rise up some, say half of yesterday. 163.5. So we get a little bounce, rise up and hit yesterday's low, or even get even higher and get into 163.5 and then continue the rollover to the downside. That'd be a nice LRE off the highs. Amazon's just a mess, but it continues to go. And it's like Newton's theory, right? It's just going to continue moving in that direction until it hits something and changes direction. So TRB suggests we make it back to 200. They could front run it and stop it from getting in that, but it's another $7. So watch the clock today. We got spot gamma that says we should hold the line and stay sideways. We got the central pivot ranges that say we should hold the line and go sideways. And we really don't have the names that we would want to see, like the Mag 7 and semiconductors working for a breakout, which implies that if we break out, we'll fail and come back in. So everything is pointing to a sideways day at this point. We've got our levels higher and lower. All we got to do is get out of them to continue to go. But if we break out, look for the reason of the breakout, because right now with the price that we have moving, we don't have any reason to break out with a breakout that sticks higher or lower. So look for the why if it's going to continue to go. Otherwise, it likely doesn't continue to go. Be careful, be safe.